Hi, October 2nd, Dan Kerr's DK Analytics. I'm the lead editor. I'd like to present you with a wrap-up of market trends, of economic trends, financial trends, of geopolitical developments, also rule of law trends, very important in all this. Let me start with, let me start by inviting you to look at our blog and our reports sections for more details on things I'm going to discuss here as a wrap-up. Let me start with the U.S. economy. The U.S. economy, obviously, the Fed couldn't raise interest rates. The economy is dead in the water and backtracking, and this is increasingly obvious. Even the government statisticians can't fudge reality. It's coming through in revisions of past employment numbers, and it continues with very weak indicators such as durable goods orders heading south for 7 months in a row, year over year, weak capital spending outside of airline business. And we also have housing starts that are weakening. We have new home sales, existing home sales that continue to be in a double-digit downdraft year over year. We have consumer confidence that isn't really where it should be, for understandable reasons, because we have an unemployment rate in reality that's closer to 23% and 5%. If unemployment was tabulated along the lines that it used to be in the early 90s, when workers that were jobless for 6 months or more were still included in the U6, we wouldn't have a 5% unemployment rate, we'd have a 23% unemployment rate. In addition, the quality of the jobs is heading south as we're losing a lot of full-time job with benefits, thanks also largely to the ramp up of unconstitutional Obamacare. And this is just adding to the loss of income, vigor, and confidence. And as consumption is roughly 70% of the economy, this has very long-term impact on the ability to get out from under this substandard economic growth trajectory. In other words, we can't until we solve this. This can't be solved until you return to sensible rule of law guidelines, to sound money, to sane regulatory and tax policy, but this obviously isn't happening. So the incentives to risk capital, to spend a lot of effort, to exert a lot of effort, hire people, to generate a bottom line that helps grow the entire economy is not what it should be, and we're actually doubling down on these, as I talk about in the blog section on property rights attacks in a couple installments. So we have a U.S. economy that really is not, can't get out of its own way given the toxic policies to status quo. We have global weakness spreading as China has allocated a lot of its GDP, and the GDP growth has come from forced or statist, if you will, central planning based diktats. That's why we have a lot of ghost cities, empty airports, bridges to nowhere. And this is what happens when the free market gets usurped by central planners, in this case the Communist Party. So this indigestion of this massive infrastructure build out in China is leaving a lot of commodity countries or commodity-oriented exporters feeling the blues, from Australia to Canada to Latin America. We have Brazil that is in the sharpest recession in over 2 decades. We have plummeting productivity. And we have declining tax revenues, and obviously reflected in the currency, the real, which together with a lot of other commodity-based currencies is falling sharply against the dollar, and even more sharply against silver and gold. Against this backdrop of commodity weakness, we have one big outlier, which I think is an opportunity for strategic investors. Actually two, but I'm going to focus on the one here, and that's the dense energy complex. We have, lo and behold, thanks to the roughly 50% fall in oil prices over the past year or so, we have oil demand globally being stimulated by about 3%. Yet at the same time, the fracking-based bonanza of adding 5.3 million barrels to the global 92 or so million that we consume daily, 92 million barrels a day, There's definitely been the only new supply, the net supply added, but that's starting to ebb, starting to roll over. And the EIA and others, which have been so perennially bullish, are looking at up to 2 million barrels less a day starting next year from fracking. Conventional oil exploration production are also being mothballed. Projects that were underway for up to $15 billion of new additional oil reserves in deep sea drilling, as well as tar sands, have been pushed out or canceled given where the oil price is. Where am I going with this? We have more and more signs that we're actually running into supply issues, but oil demand keeps going up by 1% or so, actually plus 3% so far this year, thanks to the price fall in oil, despite a globally weak economy. So we're looking at a supply shortage. This whole story is a scarcity story. Oil and the leveraged output that we can create thanks to the energy that gets released when oil-based products are ignited, in terms of spinning turbines, running generators, or pushing pistons up and down, is so significant that if we don't have this, we can't carry forward with the standard of living and the productivity that we have. So today's low oil price is unsustainable because demand is going to keep growing. It's really a scarcity story, and oil is getting harder and harder to find. One could make a somewhat similar parallel to coal in terms of current mining shutting down left and right at coal prices, and coal is the biggest provider of power across the globe, and especially in the emerging world. So this too is an issue that is going to raise its head and provides investors with a strategic view, given the dependency upon 24/7 energy that only really fossil fuels can bring. They power 90% roughly of our energy needs. We need to be invested where there is a constructive long-term backdrop, namely a mismatch over time between supply, which is shrinking, and demand, which will continue to grow nominally. So I would say, stepping back, that oil and fossil fuels complex, if you can buy assets here, that's worth looking into. We go into that on our site as well. Let's look at the rising global debt and derivatives risks. Global debt is up by $57 trillion since 2007. China being the biggest contributor to all that. In fact, Chinese banks have increased the debt on their balance sheet fourfold. And we have the Chinese economy also up fourfold debt-wise, which went from 2 trillion to, up 14-fold, the Chinese economy since 2000. And we now have a global trend where GDP is being overshadowed by debt and debt mountains. In other words, we didn't get productivity, so we had to add more debt, and we printed the money to allow it and artificially hold interest rates down. Speaking of holding interest rates down, we're at a point where a lot of derivatives have been issued, partly in an attempt to, frankly, keep interest rates low. What happens is banks make a bet on sustained low or lower interest rates. The interest rate derivatives outstanding constitute about 80% of the 505 trillion in notional value of derivatives that are outstanding, that banks haven't set aside capital. A lot of them are off balance sheets. If the value of their derivative bets, say interest rates, go up for whatever reason, rising solvency fears, rising inflation fears, fears that the central banks of the world don't have your back or dare raise interest rates, which is why they can't, then all hell will break loose in this realm, and it will very negatively impact the balance sheets of money center banks and, by extension, the central banks themselves, which are obviously filled up with government bonds and agency bonds, whose value, and given the long duration and low yields of these investments, is very dependent upon a discount rate and interest rate which remains low. So they are committed, the central banks, the money center banks, for all these reasons, to sustain interest rates that are very low, yield deprivation. Policy continues to be made for the benefit of debtors and not creditors and savers. And this is a huge risk because at some point bond vigilantes can come out. I mean, we see the Chinese selling treasuries in the hundreds of billions of dollars worth. People can determine that they don't want to purchase or hold government bonds, which really are junk bonds that have a printing press, right? So this is a huge, huge issue. Just anytime you have this much debt and this much counterparty risks, you have this spike on top of the misallocations that this policy has created and increasing economic weakness around the globe thanks to misallocations of financial repression and a reduced productivity thanks also to those misallocations. A bit on the rule of law, we've seen tremendous headlines, and this is also a concern about our public policy and the stability of property rights that I think is beneath the surface, this unbelievable fine of up to $18 billion that VW is going to have to pay for messing with the emissions or trying to trick the EPA, which is a bunch of tricksters themselves, which are a bunch of tricksters themselves, is quite over the top in my view. I'm speculating when I say this, but I think it's worthy of note that Volkswagen successfully avoided becoming a union shop in the U.S. to the chagrin of a lot of the leftists that run the government and especially also the administrative agencies, including the EPA. So I think what has happened here is Volkswagen has emissions control boxes. They have the electronics. There's different diesel particulate and carbon dioxide standards around the world. And somehow the EPA, this is my speculation given the politics involved in all this nowadays, has found a way of, in essence, testing the emissions when those cars are set to German or other country standards and not U.S. and then labeling Volkswagen, which is incredibly competent in terms of great engines, low pollution levels, and everything else, but labeling them of purposely trying to defeat American emission laws. And this is going to cost Volkswagen shareholders up to $18 billion, $35,000 per diesel vehicle. It's how do I get back to property rights? If this is a charade, all right, or this is a mob-like tactics, which I think, frankly, it is, and look at what the EPA has done in the West and the gold mine, and look at the history. Go on Google and see what kind of absolute mobster tactics in terms. And I address this elsewhere too on the site and in other reports. Take a look at what they've done, and they and other governmental agencies, the BLM, obviously the IRS, and the entire green movement around the world, that CO2 is a big pollutant when in fact it's plant food and very necessary for human life and has absolutely no positive correlation to temperature changes. This too in the latest blog for your reading if you're interested. We're talking about taking arbitrarily property rights, in this case of VW shareholders, through machinations and deeding them over to governments so that they can continue to expand their footprint and their abuse of codified liberty and property rights. I think really this is just another sign of how troublesome this whole thing is. Geopolitically speaking, we obviously have a very desperate situation in the Middle East. We have a lot of refugees. We have people fleeing from death threats and family members being killed arbitrarily by terrorists and Muslim fanatics. We also have people escaping from poor regions of Asia. They're all finding their way not only into Europe, but south of the border of the United States. And a lot of these immigrants are actually either illegal or coming for unsound reasons. But whatever the case, they're threatening to overwhelm the welfare states of both Europe and the United States. You cannot run a welfare state without having borders. and especially not if you grant benefits to people that aren't even citizens at a rate that equals, if not exceeds, that what you provide for your own citizenry. We have Merkel doing the Germans a big favor, welcoming in 900,000 and telling other European countries to do the same. These European countries, the European economy, the American economy, they're both dead on their back. They're both killing the free market and incentives and property rights clarity. So what kind of position are these countries in to accept massive amounts of people, given the perilous finances, lacking economic growth? And also from a cultural perspective, in earlier years when Western nations welcomed in people from the rest of the world, those people could maintain their cultures, but they were asked to mainstream into Western cultures and accept Western mores. Recently at the Oktoberfest, Muslims living in Europe have effectively demanded that the Bavarian government stop this because it doesn't comply with Sharia law. Where am I going? We have lots of unsustainable issues economically and culturally, and we're also printing money to sustain all this madness, which would otherwise couldn't be financed, whether it's the ECB, the Bank of Japan, or the Fed, or other banks. And this is all heading in the wrong direction. I mean, if we look in Europe, we have this incident with the Oktoberfest. We have Catalonia in Spain wanting to secede and go their own way, bring back federalism, bring back citizenship-based initiatives. We have Switzerland, a big election coming up on October 18th, where hopefully the parliament will be reconfigured to double down on sustaining the rule of law and Swiss federalism and keeping away from bureaucratic overreach and unaccountability in Brussels. We have Scotland, that I spoke with a good friend in the UK that's looking to try another initiative to secede from the UK because they think that their rights and their liberties are being trampled by the UK government. We have Texas, which obviously wants to repatriate not only its own gold, but is trying to avoid becoming a blue state, and that would give, in effect, the U.S. presidential candidates on the Republican side no more hope of winning an election, given the way the Electoral College works. There are a lot of constitutionalists in power in Texas still, and people, the makers that want to prevent Texas from turning blue. And they also, if they aren't successful, they're looking to repatriate their share of America's gold stock, whatever's left, whatever hasn't been hypothecated or leased out. And they are looking at possibly revisiting their erstwhile status as an independent country, the Republic of Texas. So all said and done, the West is under attack, and economically, the rule of law, immigration-wise, culturally, and we have these issues with all these misallocations around the world. We have economic growth that's turning over. We have an artificial 6-7 year economic recovery, which really isn't, thanks to, in essence, printing money to carry forward non-wealth of nations trajectories all around the world. And this is not going to end well. And the central banks have no choice but to continue to put their foot on the accelerator pedal and benefit debtors at the expense of creditors and savers. And against this backdrop, we have precious metals, physical gold and silver, that aren't really trading where they otherwise would be, thanks to the massive naked short selling of the power brokers that control fiat money, the central banks and their money center banks and their bullion bank buddies, via selling massive amounts of paper gold that is not available for delivery. And this has been going on. It's a grotesque manipulation, but no one's being hauled down to the carpet for it, because they're all in bed together, quote unquote, to sustain the fiat system and to, in essence, allow the cronies at the top to take the biggest, richest portion, the cream at the top, at the expense of the vast majority of the people. But surprisingly, ironically, it is exactly this absolutely idiotic pricing of gold that isn't a commodity exchange, the COMEX, It's a paper exchange where no gold contracts really ever get delivered. But we have Shanghai, we have the LBMA, we have COMEX. We see lower and lower levels of real inventory in Shanghai as a real physical commodities exchange. And against that backdrop, we see this rising debt, rising derivative risks, loss of rule of law, increasing geopolitical turbulence, loss of culture, increasing balkanization. In other words, not a very pretty picture, but gold is artificially acting, and silver, as if we're on a solid rule of law and wealth of nations trajectory, globally speaking. In other words, that fiat money hasn't been abused and government has remained rule of law instead of government by fiat. So this is a huge buying opportunity for people that think strategically, that want to put into their portfolios, thanks to the cronies trying to push down the value of what's proven to be real money since time immemorial, into their accounts. And I think oil and related assets, and we go over this on the site, are also, because they are an unsubstitutable, vital global commodity. It's how, after water, which is something we also discuss in ag assets, agribusiness assets, oil, agribusiness assets, and real money are scarce. They're vital to live and to carry forward our leveraged output way of life, but they're increasingly short supply thanks to all these abominations of our governing elites around the world. I want to thank you for tuning in. Hope this has been of use in terms of formulating thoughts and for having a look at what we offer in reports, in the report section and in the blog section. That's all for today. Thanks for listening. Subscriptions are free. Hope to see you on our site. We welcome constructive criticism and feedback. Thank you. Bye-bye.